Welcome to The Mortgage Brief, a podcast filled with mortgage loan information at your fingertips. This show is for the first-time homebuyer, the move-up buyer, and the current homeowner looking for residential lending tips and tricks about the home buying or refinancing process. I'm your host, Jason Ammon from Guild Mortgage. I'm a licensed residential mortgage loan officer with 20-plus years experience, and on today's show, we're talking about the home buying process. Can you have a cosigner on a mortgage? So stay tuned. We'll be right back. You've probably heard of a cosigner on a student or auto loan. Did you know that you can have a cosigner on a mortgage too? While not all loan programs are eligible for a cosigner, having one may improve your ability to get pre-approved for a mortgage. That's because a cosigner's income is included when your lender determines how much house you can afford. The primary role of a cosigner is to help the borrower get approved, which can be helpful if you have no, bruised, or low credit history. But a cosigner's responsibility doesn't end there. A cosigner isn't just providing a credit reference or vouching that the borrower will make their monthly mortgage payments on time. By signing a loan document, a cosigner is under legal obligation to make any missed payments immediately if the borrower is unable to do so for any reason. In other words, a cosigner accepts responsibility to repay the debt on time and in full. So what do you need to consider when getting a cosigner on a mortgage? Not everyone can cosign on a mortgage loan. If you're applying for a mortgage with a cosigner, you both must meet the loan program's minimum requirements. Also, your cosigner's credit history, assets, debt-to-income ratio, employment history, and income will be considered. Before signing on the dotted line, your cosigner should know that their credit can be damaged if you miss your mortgage payments. Cosigning on a loan can impact their ability to get a home loan for themselves because cosigned mortgage payments may be calculated as part of a cosigner's debt-to-income ratio. Here are the top 5 questions about cosigners. If you're looking to learn more, we've compiled a list of answers to the top questions about cosigners to help you decide if getting a cosigner is right for you. Number 1, is there a difference between a cosigner and a co-borrower on a mortgage? Cosigners and co-borrowers have in common that they take responsibility for paying back the loan. However, the cosigner is only liable if the primary borrower misses payments or defaults on the loan, while the co-borrower is expected to make payments from the start of the loan. Whether you choose a cosigner versus a co-borrower, you'll apply for a loan together. Because they're willing to be a borrower on the mortgage, but will not live in the home, cosigners are often called non-occupant co-borrowers. Approval is based on your combined income and assets. Typically, the lower middle score from each applicant's credit score is pulled from all 3 credit bureaus. Applying for a joint mortgage boosts your chances of getting approved. Although there's no guarantee, it also may help you obtain a better loan rate. You may also be approved for a higher mortgage amount with the combined income. On the other hand, if one of you has a lower credit score or high debt-to-income ratio, it may be best to apply for an individual mortgage. Number 2, does a cosigner on a mortgage have any rights? In addition to helping the borrower qualify for a loan, there is also a benefit to the cosigner. Paying the monthly mortgage on time builds credit and adds to the cosigner's good payment history. However, despite being responsible for the required payments, regardless of why the borrower isn't paying, the cosigners have no property rights or ownership interest. Number 3, can my parents or my spouse cosign my mortgage? This is a common scenario. A common scenario is cosigning a mortgage with a parent or family members, including spouses. Number 4, how do I get a cosigner off a mortgage? We get this one often. To get a cosigner off a mortgage, you often must qualify for a mortgage refinance on your own. If interest rates have dropped since your loan closed, your credit scores have improved, or you now qualify for a shorter term loan, a refinance might be advantageous. If you're considering refinancing, Use the Guild Refinance Calculator on my website at www.guildmortgage.com/Jason Ammon to determine how much it can change your payment and when you'll reach your break-even point. That break-even point is how long it takes for the amount you save with lower payments to outweigh the expense of doing the refinance. And finally, number 5, are there alternatives to a cosign mortgage? If you're considering a cosign mortgage because you don't have a great credit score or have a high debt-to-income ratio, an alternative may be an FHA, Federal Housing Administration, Fannie Mae's Home Ready program, or Freddie Mac's Home Possible loan. These affordable lending options are ideal for home buyers with limited cash for a down payment and offer very flexible sources of down payments, including gifts and down payment assistance programs. Thanks for tuning in to today's show. If you would like more information about this topic or any topic related to the buying or refinancing of a 1 to 4 unit residential property, please reach out to me or my team by visiting my website, www.guildmortgage.com/Jason Ammon. That's JASONAMMANN. You can also find us on Instagram under the handle @JasonAmmonGuildMortgage and on YouTube under the same handle. Thanks for tuning in, and we'll see you next time right here on The Mortgage Brief. Guild Mortgage Company, Equal Housing Opportunity, NMLS number 3274, Jason Ammon, NMLS number 126651. I'm licensed to do business in the state of New Hampshire. The information provided today is for educational purposes only. Position, strategies, or opinions of the show do not necessarily represent the position, strategies, or opinions of Guild Mortgage Company or its affiliates. Each loan is subject to underwriter final approval. All information, loan programs, interest rates, terms, and conditions are subject to change without notice. Always consult an accountant or tax advisor for full eligibility requirements on tax deductions.